Today we're going to go over the 13 different ways to lower your home insurance. If you're just shopping around for home insurance, or if you're just purchasing a new home, you're in Michigan, whatever the case is, we're going to go over the ways that you can get the best deals on the house insurance policy. On top of it, we're going to go at the end, we'll go over some of the extreme ways that you can. So worst comes to worst and you have to absolutely get that price down. Let's go over the pieces that are optional, that not necessarily recommended, but they're available to you. If you read any article online, you're going to find out that they're going to say the first and number one way to lower the house insurance is to shop around. And yes, although I do agree and I want you to do quotes with us and all of that's great, to be honest with you, if you have an agent that you're comfortable with, you really like them and they're the fit for you, go to that person first. Spend the time and have them review your account and just make sure that everything's correct on your policy before you start to shop. One of the biggest things for us is we want people to come to us, or at least do insurance with us, because they're looking for a solution. And 9 times out of 10, we're able to provide the solution, and yes, we can get the price down, but we focus more on the coverages to keep you protected correctly versus just getting you the cheapest deal. If you're not currently working with an agent like that, I'll put a link in the description below. The second, which is kind of an obvious one, is to raise the deductible. And I'll go a little bit more in depth here kind of partway into this video, because I actually agree with that. I think the deductible is probably the number one way to get the price down on your home insurance. It depends on where you live. If you're in the city and you're near a fire station and you're what we call a protection class 2 or protection class 4, which I'll dive a little bit further into, but it's essentially a low risk. If that's the case, then you shouldn't be paying more than the average, which is about $1,350 per year. Now, some areas that's the average, right? So some people are $600 a year, some people are $2,500 a year. It all depends on the build and the construction and the overall material and the cost to build your house is, along with that protection class to find out if you're in a high risk or a low risk zone. When you are in those zones, let's say you're off in the country and the response of a fire station is very low and it's gonna essentially, you know that part of your house is gonna burn down before the response has happened. In that case, raising that deductible unfortunately takes some money out of your pocket in the case of an incident, but it pulls some of what we call risk, or essentially it shares the cost of the risk with the insurance company. Because you're doing that, they're going to lower the cost of that insurance policy. Okay, Mark, I get that, but what deductible should I have? Well, if you're the common person, you're normally a $1,000 deductible. That's the average. If you're trying to get the price down, you'll see a lot of insurance companies, they'll do a $2,500 deductible or even a $1,500. It really depends on playing with it and to see which one makes the biggest impact. For more of those extreme reasons, you're going to do a 2% or even a 5% deductible, but just be careful. That's 5% of the dwelling of A. And coverage A, if you have a $400,000 house at 5%, is $20,000. Nobody wants to out-pocket $20,000 during a claim, especially if they don't have enough coverage because they're lowering the coverage to fit what they're looking for. That's not the point of having the insurance. So be careful if you are looking to do that. But once again, that's kind of one of those extremes what we'll get to a little bit further on into this video. The third way to lower your car insurance is the same exact thing we just talked about, which is deductible, but it's separated. So there's 2 different types of deductibles. You have your standard all perils deductible, and you have something called a wind and hail deductible. The wind and hail is the most common claim, so that's going to have the biggest impact. So that's the one that number 3 you would look at raising more so than the all perils. So if you have a fire, someone broke into the house, something happened on that end, you can keep that low because the cost generally isn't that much more expensive to raise it versus having the wind and hail. Wind knocks the shingles off the roof, a tree falls on the house, things like that. Anything that impacts from wind and hail happening, that's where that's going to make the larger impact on the price. The 4th way to lower your home insurance is to do a combo. Combo break. If you grew up in my age, that was the best game we ever played. Anyways, to do home insurance is to combo your home and your auto together. Yes, you can combo everything. You do umbrella, boats, motorcycles, home. Some of the main companies will allow you to get more discounts the more policies you add on, but the largest impact is the home and the auto. So that would be your first look, is to get that 20 to 25, sometimes even a higher percent off of the whole thing. So you save on the auto and you save on the home. That's where having the right agent that you're working with makes a lot of sense. Especially if you're new to buying houses, if you're working with a realtor or a mortgage broker and insurance agent, usually when they work together, that's even more powerful because they know what the risk is if there's flood zones and things like that that are all part of that policy. It helps to know that. Once again, if you're looking for those options, we actually work with all 3, so feel free to click the link in the description below, fill it out, and let us know how we can help. The 5th way to lower your home insurance is not as particular to Michiganders. It's essentially having your house resistant to weather. hail, wind, tornadoes, hurricanes, things like that. There's hurricane shutters in some states, but in our state, it doesn't really play a factor. So the companies that you go to aren't necessarily going to give as big of a discount. Now there is a digital version of that. So if you have specific home security systems that are tied into and notify the police and notify a fire station if something happens, which actually is technically number 6, is having those type of security systems in place. They're called smart homes. And when you have those will lower the price. There's also another trick that some companies do. If you have the right company that's a good fit, they'll also give you a water detection device, or they'll let you purchase one or give you a discount on one so that you can actually have your main line measured for pressure. And when the pressure drops and a claim could happen, it'll shut off the water valve so that you don't have that incident happen. It kind of sucks because you don't have water now, but it stops that whole claim, which is a bigger headache than not having water instantly. That follows along with any type of security system. If you can have a Ring doorbell or a Nest doorbell, being able to see the side of your house, the back of your house, the front, like all of those security features are great, but what's more powerful is if it's connected. It's called an internal security system. So if it's connected to police or fire station, that's going to be the better discount of the two. That actually leads us into number 7, which is the discount section. Having and knowing the right discounts is really where agents tend to shine, or not shine. Hopefully they do shine. In this case, there's a lot of different discounts you can get on your home policy. I'm making another video. I'll kind of give you guys the cheat to it. It's a video that we're coming up with that one of the customers asked is, does doing my home insurance through a mortgage make it cheaper? And to short answer that, it depends how it's being paid. If a company pays in full, sometimes some companies give a discount. Now it's not huge, it's usually about $100 or so, and it's not gonna make or break the bank, but it does help. Any little bit that you can add that with these discounts can add up. Having the roof being replaced. I just had a customer that replaced the roof this year, and that knocked a few $100s off because now it's a low risk. The odds of the wind blowing the shingles off are no longer there as heavily as it was before. Pipe updates, plumbing update, updating different heating sources, all of those pieces that can create a liability risk for you is also liability risk for your home, which really leads into having those updates on your home are going to help a lot. Once again, the combo of home and auto is a discount, so technically that's part of this section 7, but also having the right age, not that you can pick that, but age 55 and older will also a lot of times give you a discount. There are some additional discounts that you can qualify for, so speak with your agent a little bit more in depth on those just to kind of fine tune and hone which ones are going to give you the best rate and the best deal for your home insurance. Number 8 is having good credit. That's just something that insurance has always been based on. We call it an insurance score, and especially states that don't allow credit to be used, they usually allow credit scores. In Michigan, for our homes, credit does play a factor in that insurance score. So having a good insurance score will improve that. There are tricks for some agents where you can flip the spouses on a quote to find out if one or the other has a better insurance score. It's not just credit that they're looking at. They're looking at multiple things just to make sure that it's a good fit for that company. Remember, this is a profile. Your credit, your history, your claims, depending if you're doing home and auto with it, all of those pieces, the location, add up to a profile for you. And sometimes your spouse has a better profile than you, or vice versa, or your significant other, or whatever the case is. But if you're looking for the best price on insurance, having the agent that can do that easily is going to be beneficial. Number 9 is to stay with the current company that you're with. Wait, he just wanted me to shop with him. Why is he telling me to stay with who I'm with? Right? Or if you're with us, just don't shop at all. Staying with the same company can give you a longevity discount, especially if you're going to shop. So when you're coming up for a renewal, if you've been with a company for 2.5 years, it makes sense sometimes, if the price isn't a big impact, to stay another 6 months, because you could get that 3-year good customer or that loyalty discount with other companies. Some companies do them internally, but usually if you're with a company, you won't necessarily get that at that 3-year mark. So you'll have the same rate, or it'll go up a certain percentage, but then if you start shopping at that point, you're going to get a better deal. You'll probably see that discount max out after 5 years. So if you hit that 5-year mark and it's time to shop, then you're probably going to get the best deal with all the other companies that want to gain that type of business. Number 10 is to review your policy with your agent. We'd mentioned that before, but review the coverages. This is something that I actually wrote as a note on these, is to actually go back and do what's called an RCE. You can actually review and revamp that. It's called a replacement cost estimator. It's essentially a fancy way of just saying what your house would cost to rebuild. If it burnt down today, there's some cost for removing the materials, there's some cost for rerunning pipes in different legal ways, there's different changes, and then there's also the cost of the material to rebuild that house. If you look back a couple years ago, or at least even last year, the price of lumber went way up. Well, it's come down back a little bit, so even rerunning that RCE can impact it somewhat. Keep in mind, it can go the opposite way. If you do run that and the cost of material has gone higher, then you're gonna have a larger cost than what you wanted. Kind of the opposite, but at least you're insured correctly. The 12th way to lower your home insurance is when you're starting to build the home or you're looking to purchase the home. It might be less expensive to purchase a home than it is to rebuild it. So when you're looking at those scenarios, if you're working with a realtor or a mortgage broker and you're saying, this is the house I like, take note or take a mental picture of, okay, is there a lot of intricate designs in this home? Crown molding all over the place. We have recessed lighting, which is amazing and most people want, but that adds to the value or the replacement cost of that home. So if you might buy a $350,000, $400,000 house, but to rebuild it might be $600,000. Not necessarily going to increase the price majorly, but it's kind of like when you shop for cars. If you buy a Mercedes versus buying a Honda, yeah, they'll both get you there. They'll both have rooms in the house, vice versa, right? They're both going to have those options, but which one's affordable? Can you afford the cost of that, along with the cost of the insurance and all the other fees that you're going to pay purchasing a new home? Building a new home, that's the same scenario. I am one of those people that wants all the bells and whistles and all the bling and all the crown molding, and I want the vacuum built into the wall, and I want that new one that sucks up towels and throws it into the washing machine. I don't know if that exists yet, but I've seen it on TikTok. In those cases, I want that, and I have to sit back and say, okay, I get it. I can buy it, it's shiny, it's nice, but when something happens, am I gonna pay more per month? Is that in my budget to pay for my personal insurance? If you're by the water, if you're out in the woods, those add to those risk profiles when you're shopping for a home, whether or not it's worth having that. That's why if your agent is patient, sometimes you gotta have the patient agent that can run 1, 2, or 3 different houses for you. If you're making offers on a home, it does make sense to have them run the insurance to see if it is affordable in your price range for the cost. And the 13th, which is kind of getting a little bit extreme, and this is where I don't necessarily recommend it, but I wanted to be transparent and give you guys all the information, it is to look at the endorsements. Now, we actually have a video I'll link here in a moment that goes over those endorsements, but essentially you can remove them. There's a lot of pieces and packages that homes come with, and they're very beneficial. But if price is a main factor, I hope it's not, but if it is, then those are pieces that you can take off. I'll actually link a video that goes over the endorsements here to get more in depth on what options we're talking about. If you need to learn about the main pieces of a house insurance policy, coverage A, B, C, D, E, and F on all those, I'm gonna link the Insurance 101 video here that you can click on and find out more information about those. Go ahead and choose an option. I'm Mark with Valor Insurance Group. I'll see you soon.